Hi, I'm Dan, a real estate advisor with Open Realty. Today is November 8th, 2019, and the recent housing statistics beg one big question. Did the Vancouver real estate market just hit the bottom? To help understand where the market is today, let's take a quick look back at where it came from. This chart shows the average property price over the past 10 years for homes in the Greater Vancouver area. Dating back to October 2009, the average home was selling for just over $551,000. There was then a fairly steady rise in prices during the next 5 years, where in October 2014, the average price had risen to $649,000. That's a 18% increase, or around 3.5% per year. But then, the next 5 years saw a meteoric rise that peaked in May of 2018, bringing the average home price to $1,105,000. This was a 70% increase over just 5 years, an average of 14% per year. This increase was driven by a number of factors that included access to cheap money, thanks to low interest rates, investments from local and foreign capital, money laundering, migration and intermigration, otherwise known as population growth. With Vancouver consistently named one of the top places in the world to live, coupled with a high employment rate and little to no policing of where and what type of money was being used, properties were selling at record rates and for record prices. Even with demand and money coming in from these multiple sources, that pace of appreciation was simply not sustainable and something was bound to change. To attempt to curb this growth rate and to further capitalize on real estate transactions, the previous Liberal government introduced a 15% foreign buyer tax in July of 2016 that applied to properties located in the Greater Vancouver area. This had an almost immediate impact on housing prices as they dropped 4% over the next 5 months. But then, prices started to rise again and had fully recovered just 3 months later. The foreign buyer tax was later increased to 20% in February of 2018 and covered a larger area that included the Fraser Valley and parts of Vancouver Island. Additional taxes were also implemented at this time, including the empty homes tax, speculation tax, school tax, and an increase on the property transfer tax for homes valued over $3 million. And then, for the first time since 2010, the Bank of Canada started to raise interest rates. Rates were raised by a quarter point 5 times between July 2017 and October 2018. And then came the biggest change that ultimately put the stop to the rapidly rising prices. The B20 stress test. The stress test was announced in July of 2017 and took effect on January 1st, 2018. Simply put, the test makes people looking for a mortgage qualify at 200 basis points above the contract rate. This effectively reduces people's buying power by around 25%. If you were looking to buy a home in the $700,000 range, well, after January 1st, you could only qualify for a home valued around $550,000. This ultimately wiped out around 1/3 of all the people thinking about buying a home in 2018. They either couldn't qualify for what they wanted or simply didn't even want to try and get qualified. So, with buyer demand way down, inventory came way up, and prices began their decline. Looking at the Greater Vancouver stats again, it shows the average home peaking in price in May of 2018 at that $1.105 million. Since then, the average home has fallen to $990,600 in October 2019. This is a reduction of 11% over 16 months. That doesn't sound too bad, but these are average numbers for all of Greater Vancouver. There are certainly more extreme examples when we take a closer look at specific regions. Detached homes in West Vancouver have undoubtedly been the hardest hit. Peaking in September 2016, just after the foreign buyer tax was implemented, the average home was valued at $3.427 million. Fast forward to October 2019, that number has fallen to $2.523 million, a 36% drop. Over in Vancouver West, detached home prices peaked in July of 2017 at $3,661,000 and have since dropped to $2,880,000 in August 2019, a 27% drop. And what about condos? Well, looking at the same Vancouver West area, prices peaked in May of 2018 at $845,000 and dropped to $744,000 in June 2019, a 14% reduction. And yes, I did say June and not October because prices have come up since June, but more on that in a minute. So we know where the market peaked and we know how much it has come down. So the question still remains, is this the bottom? To help answer that, I'm going to reference 8 key economic drivers that most influence the market. They show why the market is where it is today and gives indications on where it will likely go next. Looking at the jobs market first, the unemployment rate in BC for the month of October was 4.8%. This is the lowest in Canada. Unemployment has been falling steadily since peaking in 2009. People go to where the jobs are, and right now, BC is that place. When it comes to wages, weekly earnings in BC averaged $996 as of June 2019, up 3.2% from a year ago. Gains have picked up in the last 3 months and are running ahead of inflation, reflecting tight labor market conditions. Looking at population growth, BC is expected to grow by 53,000 people in 2019, with the majority moving into the Greater Vancouver area. Over the next 10 years, this number will grow by over 700,000 new people, 66,000 of them expected in 2029 alone. Last week, on October 31st, the Bank of Canada maintained their overnight rate at 1.75%, with Stephen Poloz, the governor of the Bank of Canada, citing, "In contrast to these adverse global developments, the Canadian economy is demonstrating resilience overall." The economy continues to create new jobs at a solid pace. The unemployment rate is near an all-time low, and wage growth is picking up noticeably in the past 6 months or so. Economists predict interest rates are expected to either remain or even lower in 2020. When it comes to mortgages, 5-year fixed rates are averaging around 2.49%. Rates are down off their January highs of 3.24% and are currently the third lowest in 10 years, behind only 2016-17. The Canadian mortgage default rate is sitting at 0.23%. This is the lowest it has been dating back to 1990. Interestingly, the provinces with the lowest default rates are also those with the highest real estate prices, with Ontario coming in at 0.09%, followed by BC at 0.14%. Taking a closer look at BC now, the default rate sits at near record lows, similar to those seen in 06-07 and the mid-90s. To put this into a numerical perspective, of the 647,000 mortgages in BC, only 916 of them are in arrears. This suggests that for Canadian homeowners that do have mortgages on their property, the vast majority are paying them off on time and in record numbers. Looking at GDP now, BC's economy experienced solid growth in 2018, with its annual performance outpacing the Canadian average for a 5th consecutive year. BC's real GDP increased by 2.4% in 2018 after growing 4% in 2017. The BC Real Estate Association predicts this number will fall slightly in 2019 by around 0.1%. And what about real estate? Well, home sales volumes bottomed out in December of 2018 with 1,078 properties sold. This was a 10-year low dating back to January 2009. Since then, volumes have steadily increased, with October 2019 seeing 2,869 homes sold, the highest volume in 2 years. So to recap the top 8 economic drivers, we have record high employment rate, wages are steadily increasing, over 50,000 per year are moving into the Vancouver area, interest rates and mortgage rates are at 10-year lows, default rates are the lowest in 30 years, GDP is estimated to decline slightly in 2019, and home sales have been increasing for 10 months and were in October above the 10-year average. So while this data largely points to a stable economy and rosy economic forecast, what everyone really wants to know is, has the price of homes hit the bottom? Well, let's have a look. As just mentioned, October saw the highest volume of sales in 2 years and was above the 10-year average. As price is a lagging indicator of sales volume, it took these 10 months for prices to begin their rebound. For the first time since price declines began in July of 2018, the average home price in Vancouver increased in October from $990,000 to $992,000, an increase of, well, $2,300. Now, that's for the average Vancouver home, which can be a bit misleading. So let's look at some specific property types in specific neighborhoods to get a more focused look at how prices are performing in each region. Let's start with the hardest hit of all, the detached home in West Vancouver. Fallen the hardest and the longest, prices for this property type appear to have hit bottom in May and have spent the next 5 months relatively flat. While 5 months may be considered too short a time frame to call it a comeback, it's the most stable these prices have been in this area in 18 months. Jumping over to Vancouver West now, Detached homes experienced their first back-to-back monthly increase not seen since July 2017. Let's have a look at the condo market now. Starting with the popular Yaletown area, prices hit bottom in May of this year and have been on an upward trend for 5 months, up 6% off of their lows. Kitsilano condos bottomed out in January and have shown tremendous resilience over the past 10 months. Though, across the harbor, the lower Lonsdale area condos are still declining in average price, with the bottom yet to be seen. Burnaby condos too seem to be continuing their search for the bottom, with prices sliding for almost 18 months straight now. Take a look at the North Surrey area, a fast-growing area and one of them that is very popular with investors. Condo prices hit bottom in June and have shown about 4 months of stabilization. So, to answer the overarching question of has the Vancouver real estate market hit bottom, the data shows that it depends largely on both neighborhood and property type. Clearly, not all properties and areas are going to operate and move at the same pace. People paying attention to the Yaletown condo market may say it's hit bottom and it's well on its way back up, whereas those in Burnaby will tell you they're still looking for the bottom. On the other side of that Burnaby coin though, do look at the volume trend for Burnaby condos. Keep in mind that price is a lagging indicator of increased volume. So if this area follows the trends of those around it, it may see a price change in the near future. That is a look at some of the most popular and highest sales volume areas in and around Vancouver. Some prices are up, some are down. What's important to notice is the change from 9 months ago when practically everything was down. So where is it going to go next, and how long is that going to take? Well, one thing we know for certain is that real estate prices fluctuate in a predictable cycle. Price booms, then they bust, then they recover. The thing that we don't know is how long each cycle will last. While we are in some very interesting and policy-induced times, we can look to history to give us a hint as to what we can maybe expect next, and the amount of time it may take to get there. For those of you who remember the Great Recession of 2008, home prices dropped an average of 16%. This decline, or bust, happened over a period of 9 months. The cycle then turned to recovery mode, where it only took 11 months for prices to fully recover from those losses. The boom phase followed, with properties increasing an average of 88% over the next 9 years. Looking back even further, all the way to 1977, you can see the Vancouver real estate prices go through cycles year over year, but prices ultimately proved to be incredibly resilient. So much so that if you were to buy a home at the height of any cycle and right before a bust, as long as you held that property for at least the next 7 years, there's no time in recorded history that you would have sold at a loss. And that's one of the biggest takeaways we can learn from the history of real estate prices. It's not about timing the market, it's about time in the market. If you plan to buy real estate, buy a home you love, enjoy your time in it, pay down the mortgage, and plan to hold it for at least 8 years. If history continues to repeat itself, you will do very well as a homeowner. Don't worry about the cycles, let the market do its thing, and just enjoy living in your home. Thank you so much for watching.